Just another quick video today. Today we're going to go through the difference between a fixed and variable rate home loan in Australia. So first we'll start off really basically, what is a fixed rate home loan? So essentially a fixed rate home loan allows you to fix a interest rate for a certain amount of years. So generally it's between 1 and 5 years in Australia. So you've got the option of 1, 2, 3, 4 and 5 years. And you're able to fix an interest rate at the time, whatever that might be, for that period. And then after the 5-year period, for example, the longest period, it will switch back to variable. So what that means is probably the most common one that a lot of people will know is during the COVID period, we had really, really low interest rates, and a lot of people fixed their rates for between 3 and 5 years at about 1.99 or early 2s. And that was in the year 2020. So now we're towards the end of 2023. So a lot of the loans that were fixed for 3, 4 and 5 years will be coming up shortly. So I thought I'd do a quick video and sort of explain that in more detail. So that's a fixed rate home loan, and a variable rate home loan, as you can see on your screen again, just always use Money Smart just as an easy guide. Variable rate home loan is dictated by the cash rate. So essentially when the interest rates are really low, the cash rate is really low, your interest rate will be quite close to the cash rate, a couple percent higher or something along these lines. And the interest rate will increase and decrease along with the cash rate. So just as an example, I'll jump over to the Reserve Bank of Australia, the RBA website, to show you what the current cash rate is. The cash rate is currently 4.35%, and putting it as simply as possible, the cash rate is the interest rate that the banks pay to borrow money. So essentially, when you see the cash rate, that's not what you're going to pay on your loan if you have a variable rate home loan. That is the interest rate that the banks pay to borrow money. So your interest rate will usually be a couple percent higher. So generally 2.5%, 3%. So for example, right now, most people are in early 6s if they have a variable rate home loan, early to mid 6s, if not higher. You can get this data, I've showed this in a previous video, you can go directly to the Reserve Bank of Australia, the RBA website, type in cash rate, and it'll come up with the current cash rate. So the cash rate is dictated on the first Tuesday of every month, not including January. So the next time we will have an interest rate increase or decrease in the cash rate will be in February 2024. So we've got a while away. So going back to that, we've touched quickly on fixed rate home loans, variable rate. So again, fixed rate, you can fix your rate for a certain amount of years. Variable rate is in line with the cash rate plus XYZ%. So what does that look like? So in Australia, I'll just go to the sort of the top bank and one of the other top banks. Everyone knows the Commonwealth Bank of Australia. If you're watching this video in Australia, you can go to their website, type in fixed rate home loans, and you can kind of see what you can borrow or what the percent, the interest rate that you can borrow for. So we've got 1, 2, 3, 4 and 5 year packages. On the right side here, you can see the interest rate and the comparison rate. So quite simply put, the comparison rate is the interest rate, but it also includes things like fees, charges, any ancillary fees that would be attached to the loan, and gives you a more accurate representation of what the actual interest rate would be on an annual basis. Also gone to ANZ and done the exact same thing. Go to their website, fixed rate home loan rates, scroll down a little bit and you can see exactly what the interest rate would be and the comparison rate for a 1-year loan, 2-year, 3-year, 4-year and 5-year. Now, just briefly, since it's on the website here, it's saying a 1-year fixed LVR of 80% or less, and then it gives you the same option with an LVR of more than 80%. LVR stands for loan to value ratio. So what that means is if you have a loan to value ratio, LVR, of 80% or less, that means you have more than 20% of equity in your property. So again, going even more basic is if you have a $500,000 house, 20% of $500,000 is $100,000, means that you have more than $100,000 of equity in your property, meaning that you will get the lower interest rate. If you have less than $100,000 of equity in your property, you'll get a slightly higher interest rate. Again, going down here. So remember that term, LVR, loan to value ratio. Now, that was a really quick and basic video. We wanted to make this as quick as possible just because it seems to be quite a common question. It seems to be a more common question now, especially since a lot of loans are coming up to they've been fixed for 3 years, for example, whether it was in mid 2020 or late 2020. A lot of the people who borrowed during that time are now coming into variable rates, so they just kind of want to know exactly what's going on. So I thought I'd make a quick video about it. If you have any questions or anything else you'd like to see in this sort of a style video, do leave it in the comments. Otherwise, thank you very much for watching the video. Cheers, guys.